Hey everyone, TGIF. Thanks so much for joining me here on Finance Friday. Today I want to talk about 3 things to consider in a rising rate environment. So first thing is, if we want to get an idea of where rates might be headed, don't wait around for the Bank of Canada's next overnight rate announcement. I would encourage you to go and have a look at the bond yield, so Canadian 5-10-year bond yield, and you'll see that yields there have been slowly rising, and that's happening in real time. Gives us a great idea of what's going on in the underlying economy and how the bond market is responding to that, and is a much better forecaster with respect to where rates might be headed, as opposed to the Bank of Canada overnight rate change, which is really a lagging indicator. It happens after the Bank of Canada has sort of evaluated all that economic activity and made a decision. So bond yield changes in real time, so it's a much better forecaster. So have a look at the bond yield if you're wondering where rates are headed. Second thing I would consider is, for those of us who are thinking, hey, prime rate's gone up by 50 basis points, now my term deposit rate's going to go up by 50 basis points. It's not going to happen. Not anytime soon, I don't think. The margin environment has been so tight for so many years that I really believe that financial institutions are going to take a couple of deep breaths and sort of enjoy that margin expansion before we raise rates and compress that margin again. So I could be wrong, but that's my opinion. I don't see rates jumping up by 50 basis points just because prime rate went up. The third thing to consider is that although the rate change did not affect fixed rate mortgage, so if you're midterm on a fixed rate mortgage, your borrowing rate didn't go up. Rising rates may affect that at renewal, but it didn't happen in real time. It did affect the cost of borrowing to variable rate products. So things like home equity lines of credit, variable rate mortgages that are tied to prime, your cost of borrowing did go up. So you want to go back, revisit your payment, have a look and make sure that the money that you're putting towards that debt is sufficient to cover what you're obligated for and or is still going to keep you on track with your goals. So 3 things to think about in a rising rate environment is, 1, if you're curious about where things are headed, go and look at the bond yields. 2, don't expect an increase in term deposit rates right away. And 3, have a look at your variable rate debt and make sure that your payments are still sufficient. Thanks so much for joining me, and have a great week.